Today's Keys to the Commonwealth episode is brought to you by Nova Insurance. Are you a business owner or property manager in Kentucky or the surrounding states? Protecting your investment has never been more crucial. Nova Insurance specializes in commercial risk advising for your commercial business, as well as your commercial real estate and rental properties. With personalized service and expert advice, Nova Insurance ensures you are covered from every angle. Call 859-687-2004 today or visit them at novainsuranceGroup.com. Nova Insurance, securing your future one policy at a time. Now, today's episode. Welcome back to another episode of the Keys to the Commonwealth podcast. Landry Fields. I'm excited for today's guest that's going to talk about a different type of investing that we've never covered, and I think most people would not even say they'd never even heard of as an option for investing. I wouldn't even necessarily call it real estate. It's more like land investing in some respects. Of course, he does real estate, I think, in some other capacities. But without further ado, introduce Brian Luftman to the podcast. Welcome to the show, man.
Thanks, Landry.
Yeah. So we've obviously crossed paths in a number of ways between some commercial groups and some study groups and stuff like that. And I've been wanting to have you on for the last couple months to kind of talk about your new unique aspect as far as investing, and then sometimes ways people can obviously invest more passively into real estate in different capacities. So without that, before we start that, jump back into the DeLorean like I usually say. And how'd you get here? Where are you from? How'd you get into the path where you're at today?
Sure. Yeah. So I'm currently the president and founder of American Farm Investors.
Yeah.
And that's what we'll be talking about, farmland investing today.
Yeah.
I grew up in Lexington, Kentucky, here and where we are today, and went off to Miami of Ohio for college. Met my wife there, Sarah. We moved up to Chicago, and I was a trader up on the Chicago Board of Trade floor. That's what I wanted to do since I was a kid.
Yeah.
And I was one of those guys in the trading coat with all the hand signals and the yelling and everything like that, and did that for about a decade. And about midway through my career up there, I just started. I had a couple good years, and I started making some investments in passive type of stuff. So I had found a company that did syndicated real estate investment, where you can be a part owner of a building in somewhere around Chicago, or
Sure.
You could, and I owned like 4% of some Social Security Administration building in Aurora, Illinois, and I got 4% of the income, and it was like a model that I kind of liked, and they managed it for me. And so, but I was looking for someone who did that in farmland, and I couldn't find anybody to do that. I really wanted an inflation bet, an inflation hedge, because it was at the end of the housing crisis, or the beginning of the housing crisis in 2007. And assets were getting a little bit scary to own. There was a lot of inflation going on,
Yeah.
and the money printing that happened to get us out of the big housing collapse really scared me. So I wanted to own a farm, and that was my way of betting on inflation. So having not found a farm investment company, because I couldn't find one, I just went down to Southern Illinois or Central Illinois around Champaign, which happens to be where my wife is from. And I bought a farm. I bought an 85-acre farm down in Monticello, Illinois,
Okay.
and set it up with a crop share and rented it to a farmer and grew white corn for Frito-Lay, and I grew soybeans and made money off of it.
Just like, hey, I'm going to do this. I'm going all in. Just right off the end, just jumping. I love that because we mentioned, I think looking to see where everybody's going and then saying, hey, I'm going to go over this direction, and obviously, hedging your bet on inflation with cropland and farmland obviously is doing that. And so you ingest in the first one, obviously I assume the model works. Then it's a long play model, I would assume, in that sense, right?
Totally.
Obviously,
Yeah.
a little bit different than commercial property itself, where it's a lot based. I assume it's still based upon rents in some respects as far as that goes.
It is. And what grain prices are. Like if corn prices go up, you're making more money, and then the value of the farm underlying is worth more.
Is there how's that work then? Is it not based upon purely just the rent, or is it?
So good question. So I set up these farms so most farm leases are somewhat variable because you don't want to be locked in with a cash rent for 10 years. And
Sure.
The whole point of having an inflation bet is so that the rents go up as inflation goes up.
Yeah.
And I took it a step further, and I wanted to be, I want to have some bet on with the farmer where if he has a good yield, I make money also. But also if corn prices go up, which is essentially the bet I'm making, I want to be able to capture that full gain. So if corn prices go from $4 a bushel to $6 a bushel, my income goes up 50%. That makes sense.
Okay. And then is it usually just 1 year scenarios and then you're reinvesting it? Like obviously there's not like a Zillow to see or
Yeah.
some of these things that say, hey, here's what your normal rent would be per acre or whatnot. So really, how's that kind of break down, or where are you comparing it to in a lot of ways?
Yeah. So the traditional way would be I would set it up with a crop share. So I would invest with the farmer in the seed and the fertilizers and everything like that.
Sure.
And then we would split the gross rent or gross revenue at the end, if that makes sense.
Okay.
I should say net revenue. I didn't really love doing that if I was going to do it for an investment for other people, because then you're having to really trust the farmer 100% on the accuracy of his data and everything like that.
Okay.
It's a lot. I came up with a model that's way easier, and it's literally a variable rent that's based off of corn, wheat, and soybean futures.
Gotcha.
And the farmer is very, they're very used to it at this point. And I think I'm one of the only farm managers that does this, or really farm investors that does this in the country, where it doesn't have anything to do with how much yield they make off the farm. It's literally just if the corn prices went up, typically the farmer made more money, so they're happy to pay me more rent. If it goes down, like this year, we're going to have less. We're going to make less money this year than we did last year. If any of your listeners look at a chart of corn prices, they're significantly lower than they were 18 months ago. So
does that mean food's going to go down?
Should. And I honestly believe, like right now, I just drove by.
Interesting.
And gasoline was $2.99 to $3.10 on the way out here. I bet it'll go down to $2.50, $2.60 within the short term, just because corn prices tend to go in tandem with oil and gas prices. So I do believe inflation for the short term is at least in commodities, seems to be cooling off significantly. Yeah.
I mean, I think we all can agree that's not necessarily a terrible thing. We can't just have a sustained inflation, period. And that's a whole nother conversation for sure in that sense. But
right.
So then you move back to Lexington then and establish this aspect of things. And so obviously traditionally it's more of a model where you have investors, as we call syndicates and stuff like that, where you're pulling together different investors and like that. So break that down a little bit as far as those who don't know about syndication, how that works.
Sure.
Really obviously it's a simple concept at its core, but kind of the new nuances of it is, how you buy out of it or different things of that nature.
Sure. So anyone who's ever made an investment of any type with a friend theoretically did a syndication of some sort, right?
Yeah.
You shared the risk, you shared the wealth. That's kind of the same model. It's just we have to complicate it a little bit further, where my whole concept with starting American Farm Investors was, let's make this a full service turnkey investment for people who have no idea how to invest in a farm, but they want that as a portion of their portfolio.
Yeah.
And so now we go out, we buy farms. The first farm deal we did was in Harrodsburg, Kentucky. I bought 100 acres for $600,000, and then bought another 30 acres for another $200,000. It was an $800,000 deal. I had 12 partners, and some put in 50 grand, some put in 100 and something grand, and they owned whatever percentage of the 800 grand they had. I'm the manager. I take a fee, not a big fee, and I also take a carried interest. So if any of your listeners are curious about what a carried interest is, it's literally just like a tip that I make at the end if I make everybody a lot of money. So if we double our investment, make 800 grand for these guys, I get 80 grand, I get 10% of it, and they get the 720. And everybody walks away happy. Yeah. And they thank me for making the money. And so that's what a lot of private equity companies have, like a 2 and 20 you'll hear for hedge funds, which is 2% management fee and like a 20% of the upside. Mine's way less than half of that. It's like less than 1% annual management fee of your money invested, and then 10% of the upside. But it's a real simple, repeatable model. We've put 12 such deals together over the past 12 years, bought probably 30 something farms, sold a few of them for like higher and better use. We sold one to a distillery down in Danville, Luca Mariano Distillery. That's a farm that we used to own, and sold it to that developer. Not for a huge gain, but for, a solid gain for my clients. And but for the most part, everyone who's made an investment with AFI, American Farm Investors, is up on their investment significantly, because we've had a really good inflationary cycle over the past 4 years since the war started in Russia, and or in Ukraine, I should say. So it's gone pretty well for everybody.
And in that sense, really, I mean, I feel like you could almost think of it, and correct me if I'm wrong, almost think of it like, you're investing in an ETF or something where it's more of a stable type of scenario. Your risk is minimized a lot, but your upside might be. But of course, then you factor in things like the inflation aspect that no one could probably predict. And that was like, oh wow, this was great in that sense. Right. Is that kind of more the mindset? It's maybe not as again, you're not getting rich quick, but obviously as opposed to investing in a real estate where there's more potential upsides, but there's also more potential downsides in some respects there.
Yeah, you bring up a good point. This is about as low on the risk return profile as you can possibly get on a chart. I mean, there's literally zero risk for a vacancy. I shouldn't say zero, but we've never had one. And
Sure.
I can't even foresee ever having a vacancy on any of our properties, or really for that matter, a capital improvement that needs to happen. Like if you own a real estate, like multifamily here in Kentucky, yeah, your cash flow is going to be higher than our 2 to 4% annual cash flow that we get off our farms.
Right.
Most likely. However, you're going to have an air conditioner unit go out, or a sewer pipe get blocked, or whatever, you name it. That's the type of stuff that we just don't have.
Well, that's what I was going to go into next. That leads me there, which is your NOI, your net operating income. I mean, it can't be nothing, but outside of management fee, I mean, because I'm in the business of insurance, obviously, and the rule of insurance is you can't insure dirt. As far as you can obviously have some liability there to an extent, but it's got to be next to nothing.
It's virtually nothing except for taxes and liability insurance.
And then your job as the manager is probably more it's got to be managing different stuff, but at the same time, you're not having people, like you said, call with I've got a broken air conditioner type of scenario, or that. So
no, a couple of farms that we have a house on them, which is just a little bit of a thorn in the side.
I was going to say annoyance at that point.
It is. We don't make money on them. In fact, I think over time we typically lose money on the houses that are on the properties, but at least, there is some value in them. Maybe someday to someone else who buys the farm that wants like a historic farmhouse.
Yeah.
So we just kind of maintain them and hope that that's part of the value someday, but no, it's a pain. We'd rather just own the dirt. It's so much easier that way.
That's right. Yeah. And obviously, I assume there's nothing slowing down. I think people hear a lot of things in the news about other countries buying farmland, et cetera, and so forth like that. But I assume there's still a big opportunity to kind of do it ourselves, like as an investor, whether you want to call you and be a full-time investor with you, different things of that nature, I'm sure.
Yeah. Less and less though. There's a lot more competition that's popped up since I started this business 12 years ago.
Like from a local or U.S. national type of level, or more even the international?
You name it. there are more investment groups competing with me to buy land here in Kentucky than I've ever would have imagined.
Wow.
There's also, there's a lot of the wealthy, and like Warren Buffett and Bill Gates and Ted Turner are three names that are thrown around in land ownership. Not to mention there's a guy out of Kentucky who was in discount cigarettes named Brad Kelly, who's one of the biggest landowners in Kentucky and really in the country. And he's in Kentucky. So there's a lot of competition from high net worth individuals on their own, and also private equity funds. And I think I'm flattered by all of that, because it means to me that when people, whether it's a hedge fund or a endowment fund or a public institution's retirement basis, or just a wealthy individual, they all make the same conclusion that I made, which is, okay, this is a smart asset that we should have in our portfolio in some way, shape, or form.
And then regarding that, back to the private hedge funds and equity groups and investment firms. I assume it's not the BlackRocks and the Vanguards, or is it are they doing it as well? Or are we talking about other ones? I'd
actually be shocked if BlackRock didn't have some kind of component of farmland investment. There's a group called Hancock Ag that they have managed a multi-billion-dollar portfolio of farmland. TIAA-CREF, who is the Teachers Pension Fund, they're a huge landowner. So I really would be surprised.
I don't think most people even realize that a lot of these colleges, between their retirement funds, their hedge funds, their, if you got a pension fund, whatever, invest that money in type of scenario. Oh, yeah. Insurance agencies, carriers even do that. I don't think take State Farm, et cetera. They're negative every year if it wasn't the fact they're investing a lot of those premiums.
Mm-hmm.
A whole nother conversation, but technically that's what people do with life insurance. But I still recommend term life in that sense for a lot of people. But yeah, I just love the fact of investing in that sense. There's so many different variables as far as how you can invest, and you can almost invest in anything if you really think about it at the end of the day.
Right. And I think the same thing can be said about the syndicated model that I was discussing. If any of your listeners have a deal that's too big for what they can chew or bite off for themselves, I think it's a really good model to employ in your own world. If you're trying to be not necessarily a professional money manager, but just someone who's, anyone that gets into real estate thinks, okay, now I found a bigger deal. How can I get this one done?
Yeah.
And with interest rates at 8 and whatever percent they are right now, it's a little harder to get stuff done. But if you actually had quite a few investors who were interested in making an investment in someone who was young and hungry and ready to attack something and manage it properly, then you can bring in this syndicated model. It's pretty basic. You set up an LLC.
Well, pause right there because I actually wanted to ask you if you would be willing to do that if somebody, aka I had an idea, got some ideas, and I don't have the cash for that type of scenario. And I have been thinking about the same kind of concept of, not full syndication, but more of this private syndication stuff. Where does one start as far as what that looks like from a document, a buyout scenario? Do you keep the equity at the end of the day as far as buying out from the investors? I guess there's different models you can take in that sense. If you wanted to eventually buy out the investors, where would I start in that sense? If you're talking to me here, which you are.
Yeah, exactly. And everyone else who's listening. Yeah. But I'm going to tell them all how to compete with me by giving them my the secret sauce on how to form a syndication, which is fine. I'm fine with it. I'm comfortable enough that I do it right, and I'm going to always have business.
And most people will not actually go through and do something with it.
98% of them won't even think about it.
Right.
But yeah, it's real simple. Actually, you find a deal. I think that's the first step. You find something that motivates you to do all of these next steps. What I wouldn't do is spend a bunch of money on legal documentation, all this stuff, and not really have a deal or a plan.
Sure.
You find something that you really feel like you want to take on, then it's pretty simple to put together a partnership agreement and an LLC operating agreement is what it is.
Yeah.
And that's just so any investor who puts their money in is going to sign that operating agreement. And that just says all of the stipulations, like if this, then this. And there's boilerplate stuff for that, but there's also, you could pay an attorney and come up with a little bit better, more tailored for what your partnership agreement is going to be. It's real simple stuff though. And it really should just outline the main stuff that people want to know, which you already brought up. If I want out, how does that happen? Yeah. If this, then that. And so you put that together, you have to only solicit private investors who have an accredited investor status, which you can, your listeners can look that up, but it's pretty much have to either have $1 million in net worth or a net income of, or an income of like 200 or 300 grand, depending on what your situation is, married or.
And that's if you want to do it which way?
So that's
different than like if you had just private.
No. So private equity in general, if you are not registered with the SEC, which I'm not. Okay. So if you brought up a REIT.
Private, I mean, private is in just getting friends, family, people, type of scenario. You're talking about either way?
In general, period. There's two types of investments. There is SEC regulated investments, and then there's everything else. Okay.
Yeah. Okay.
And if you're in everything else, for you to solicit, this is my understanding of the law. I'm a lawyer. For you to solicit anyone else to invest in your deal, unless you're like best friend and you decide to go partners on some kind of real estate. No, he's not going to sell you up the river and say that you were against SEC regulations. But the bottom line is, if you want to remain exempt from the SEC, which I am, and most private equity companies are exempt, you have to just solicit accredited investors only. And that accredited designation, the SEC has basically said, if you're an accredited investor, you're wise and successful enough that you've made you can make your own decisions, and we don't have to monitor.
Accredited investor is $1 million net worth, or what was it? I forget the specific.
Million net worth, or 200 to 300 grand of net income for 2 years, or income for 2 years in a row.
That was the right part of that.
And a lot of times the investor has to self-certify themselves. So me as a manager, I say, are you an accredited investor? Check this box.
Yeah.
And that's it. I'm not going to go do an audit on them.
Gotcha.
It's and the legal liability is on them because they said that they were. Then if they try to sue me and say I didn't know what I was doing, I'm like, well, you check this box saying you're an accredited investor. You know what I mean?
Right. I mean, this is a totally different conversation. I don't know, in a question, I don't know if you've ever thought about, and we don't even have to go into it, but from the world, this may seem out of left field. I'm sure you thought about this. I've always thought about the syndication aspect of model. If you weren't doing the high net individual, accredited investor aspect, where it's more of a stock share type of deal, how technically a blockchain contract receipt that you could therefore then sell to someone else if you wanted to, seems like that is an inevitable place where somehow it goes eventually. I'm not saying it's tomorrow. I'm not saying I know all of it. It sounds a little bit out there right now, but from a logical speaking standpoint, I don't know how much you know about just the blockchain aspect, or really it's just a receipt aspect of things. I'm like, that seems like a way that people could invest more in micro ways, like a syndication, without having to actually be a full accredited investor, so to speak, like that. Do you have any thoughts on that? Honestly?
Yeah, I love it. I'm a blockchain believer. I think there's a whole lot of technology there in that blockchain that can be used and will be used in use cases like what you just described.
Yeah,
where the buyer and the seller both agree that, and whatever information then they agree upon is in the chain. So
Yeah.
it's just public record. And I like that a lot. I think the Jobs Act, it was a few years ago, I hope I'm quoting the right act, but it was a federal government act that allowed for crowdfunding. And there's reg filings where you can do a public type of investment where I could literally, if I did all the right filings, even as a private equity investor, I could say, invest in this. You don't have to be accredited, but I've already done all these filings. Everything's been approved. All the messaging I've put out is approved. Then the investors, even if they're not accredited, can invest at their own risk. And at that point, they could buy, tokens or whatever we want to call it, shares of a farm, and they could publicly trade on some platform, and they could make transactions. And yes, to my knowledge,
it's coming somehow, one way or another, it's coming.
Here's the thing that's the constraint. It's not legally constrained at this point. Like the federal government has said, this is okay, you can do it. I'm not sure they've said it on the blockchain, but that you can make crowdfunded type of investments with the right regulatory filings. I think the constraint is the manager, me. Like if I want to do that for American Farmers, that's a whole lot more work and workflow. Now I've got 1,000 clients in one of my deals instead of 10. And do I want to deal with that? And so if it's like $100 million real estate fund and I'm trying to get 1,000 clients, well, I've got enough management fee coming in that I'm willing to cover that. But if it's like a $800,000 farm, no way. I'll take my 10 investors all day long. So it's just kind of like going to be on whether the sponsors of these deals want to take the extra effort to put all that work into place to get,
I even know there's a hotel out in Denver that's tokenized in the sense of like there's shares, and you get perks from having it, but there's obviously, and again, for those that don't know, it's really just a contract at the end of the day and a receipt showing I own this ticket to this sporting event or ticket to this or that, or own a share of this type of scenario. It's really all, and it's not duplicable. Like you own it and there's no way for someone to kind of prove otherwise. I mean, that basically proves it. I won't try to explain blockchain as a whole. I could, but it would just bore everybody. You can go look that up on YouTube in a much easier fashion in that sense. But I don't know, just random thoughts I usually have as far as where things are going. I'm like, it's
I'm a believer, man.
It's something is going to happen in this regard. And like you said, I think it's going to be something that are much more larger scale, probably scenarios like that hotel, for example. I mentioned that's in Denver. That makes more sense when, I don't know, you could do it a number of different ways, whether it's a per square foot or whatever type of scenario versus smaller stuff. It's just not going to be worth a headache as far as getting that off the ground. But I think one day there'll be platforms that kind of make that a much more viable option in a much more simplistic way, almost like you're going to an Amazon, but instead you're going to literally buy shares not Amazon, more like more like a stock exchange type of scenario in some. But you're doing commodities in a different way.
I'm a huge believer in the blockchain technology, and I was an early, not early, like I'm not driving a Lamborghini over here, but like I was an early investor in Bitcoin and Ethereum, and I still have quite a bit of it. And to be honest, I really think it's got a long way to go from here. I mean, I don't think it's going to be very long before real restaurants say, you got me on to talk about farmland, and now I'm talking about blockchain.
I love it.
Before restaurants, like, do I want to take a Visa card right now from this client and have on $100 dinner and pay a 3% charge, which doesn't sound like much, but when a restaurant's cost in their meal that they've just served you is like probably $80, they're only making 20. If you take $3 out of that 20 away from them because of a Visa charge, they're going to be like, well, forget that. Let's offer it up from blockchain. If somebody puts it on their Coinbase and they're like, I'll pay for it with Ethereum or whatever, then they just saved their 3%. And that's like literally 20% or 15-20% of their margin.
Adding that up over the course of a year,
you become 10 to 20% more profitable as a restaurant if you just take blockchain or Bitcoin instead of.
That's a good point.
So,
and for those that don't know, people need to think of, again, I think Bitcoin is more of gold in the way we invest in gold, whereas there's a lot of other aspects where it's going to be more use case, like you said, on the Ethereum chain and so forth, like that.
Agreed.
But yeah, I mean, it's fascinating kind of things to think about in this world where, in a lot of ways, it's almost like the 90s again, where the internet was, if you were really kind of thinking about the future, where things going, you were ahead of the game and knowing that, okay, this internet thing is going to change the world. I think blockchain is definitely, we can talk, I'm not going to talk about AI and stuff like that, but it's like we're in that kind of precipice again of just like everything's going to get flipped.
Yep.
And the opportunity out there is there for the taking all over again in that respect, especially for those, 40s, 30s type of scenarios, even 20s. I mean, you're seeing more millionaires right now in their 20s than they've ever been in history type of scenario.
Right.
Of course, the millionaires. I mean, those that made 100,000 back in the 90s, you had to make like 300,000 these days to really equate to that. But still, in some respects, you get the idea what I'm talking about. But
nobody knows how it's going to look. I mean, that's what's awesome. They created the internet, and then who would have ever imagined Instagram being one of the biggest winners on the internet, which isn't even really, it doesn't even look like a web page. But I think that's what's going to happen with blockchain. Nobody knows what the killer app's going to be and how it's going to be utilized perfectly. But someone's going to figure that out, and then it's going to be game changer.
And it's going to be tied in with investing in a big heavy way at some point. It's not just some crap picture of a whatever monkey on a, that's not what we're talking about then. And the NFT is just a contract kind of scenario, almost like a share. We're talking about, this is really just going to be more use case with it. But for those that are still listening now at this point, like I said, I like getting in the weeds and stuff like this. But you got, I think, other investments, anything else that you're kind of working on? I know were you doing some bourbon stuff, or is that still a thing at all? Oh, yeah. You don't have to talk about that if you don't want to. But
I mean, we're going.
You said, I forgot what it was. It was like the reverse of the bourbon industry in some capacities, the way I would say it.
Well, it's the only bourbon that's ever been shipped in a barrel to a different country and bottled in that country.
That's what it was. Yeah.
It was just named Forbes' best bourbon in the world by Forbes magazine, which is kind of awesome. What? Yeah, no joke. It's called Never Say Die bourbon. You can look it up. It's got a really cool story.
Nice.
Maybe that's for another podcast for your and listeners can look it up.
Yeah.
I am swamped with that right now. I just closed on a $3 million farm deal yesterday, and I'm so happy to have that behind me. I'll get all my final paperwork out to my investors, and then I can really deep dive back into the bourbon industry, because that's really what I'm swamped with right now. It's just one of those deals where it was like running in the background for 7 years, and then all of a sudden, like, Forbes writes this article and everyone else is talking about our brand, and then you can't find it on the shelves. And we're trying our best to keep up.
Is it on the shelves here, or do I have to know somebody in like England to ship it to me?
No, as of November, we got it in distribution in Kentucky. It's probably sold out almost everywhere in Lexington right now, but we're restocking our distributor soon. And then we have a whole shipping container coming from England of a bunch of pallets and we're going to stock the heck out of Kentucky even though we're getting into distribution in California, Arizona, Washington, Nevada, and Illinois and Tennessee coming up.
Okay.
Kentucky, we want, because I've heard people who come into town say, I can't find the good whiskeys in Kentucky. I have to go to different states.
Everybody says that, yeah.
Isn't that obnoxious? Never say die.
Everybody in Kentucky knows what they're looking for, though.
Right.
In that sense. But,
so hopefully our stuff is the opposite. I really want Never Say Die to be just available mainly in Kentucky, whenever readily available. Get people to come here. If it's available in all these other states, great. If it sells out there, that's fine. So anyway, it's a really good whiskey. We've been working on it for 7 or 8 years.
Nice.
Me and a couple partners, and we have a blast with it. So
that's awesome. I'm a big bourbon guy. I've slowed down on my purchase because I got a stupid collection now.
Oh, really?
But and as you know, just because it's expensive bourbon does not mean it's good bourbon. Right. That's the first lesson you learn real quick as far as that goes. But no, that's awesome. I'm sure it's more of just a passion project in some ways.
It was. Now it's darn near a full-time job, but it's fun. Like, this is the type of stuff that entrepreneurs dream
and
about.
That's an investing aspect again. I know there's people in town that invest in almost like syndicate investing within bourbon barrels and different stuff as well. They've been in here in my office and stuff like that on a different podcast and so forth. But back to the end, you can almost invest in anything. It's just somebody has to like think outside the box and how to do so. But I don't want to keep you up too much more of your time. But if anybody wants to learn more about either the bourbon or obviously American Farm Investing, where can we go to either contact you or learn more?
Yeah, I mean, my contact is on both websites, so people can get in touch with me either way. The AmericanFarmInvestors.com is my main American Farm Investors website. Yeah. And then, just as obvious, Never Say Die Bourbon is the other one. So, and like you said, it's mostly available in England, but we're about to launch our rye whiskey over here in America next month. Okay. And our barrel strength is only available in England. We're going to probably keep it that way for a while. So we're trying to make it like a British brand that kind of has ties here in America. So we'll see how it goes. But anyway, if your listeners want to look that up, it's a cool story.
Yeah, story, I've heard the story is really cool, and that would take a whole podcast to tell that story. But definitely go to the website and learn more about that bourbon brand story, because it's pretty fascinating, and the ties, I believe, to England, and I think even some famous people actually over there.
Absolutely.
What's the cliffhanger? Who was it tied to?
I mean, when we start dropping names, I mean, all these people are very closely tied. Like the Hall of Fame jockey, the greatest jockey in English history, Lester Piggott, is the least exciting about all these people. Queen Elizabeth II, who just passed away.
Yeah.
Winston Churchill, Paul McCartney, John Lennon.
That's what I was thinking. There were some Beatles and some kind of ties to the story. So go check that out on the website because it's a fascinating story. But Brian, appreciate your time and appreciate you coming on. And we'll see everybody back for another episode of the Keys to the Commonwealth.
Thanks, Landry.
Thanks.
To learn more about this podcast, visit our page at keystothecommonwealth.com. To connect with Landry regarding insuring your investment portfolio, email Landry at novainsuranceGroup.com or call 859-687-2004.